the highlight today, twofold. Number one, what do we want to see in order to qualify as short? We want to see longs come in. And so if you look right in here, you had the NASDAQ on the right start to get hit. And right before this break, we've seen a bunch of longs come in and try to just get a tick or two. Boom, they come in here and they try to just grab a tick off or above it. That's what these gray lines are for. Help facilitate a drive lower. Plus, you have the NASDAQ falling out of bed. So that's what you look for to get continuation or to get some follow through. Now, we had a really dangerous chop in the first hour. And it's one of those things where you got to force yourself to be patient and let something slap you in the face. When we were doing this, we did this and we came back to here. And it's the other side of the mountain, we call it. There's always an X amount of shorts everywhere, an X amount of longs. So you get so many shorts in here, you run up and come down. You're always going to have less shorts. Doesn't mean it's always going to go lower, but you need less shorts to go lower. Why is there most likely less shorts here in this example? Because of context of running up and then back down. This run up shakes out shorts, stops them out. So you get the less shorts equal less buying below. Less buying below always makes price easier to go down. And this is not the example in this particular image, but we got it after the first hour where we're just chopping. They wanted to fill that gap. They wanted to go 10 lower. They end up going 30 or 40 lower, but they had to go up to come down, and then it cleared the way for the wicked downside we got in the second hour in this particular session. So in a gap open higher, you always get everybody that is super bullish, and that's fine. But when at some point it doesn't work, you get them, because it's a gap open higher, falling in love with that opinion, falling in love with that bias. They look through that filter, and then they even try to buy yesterday's high, they get run over. They try to buy yesterday's close, they get run over. So it's a reversal you could see in the making when there's gap open higher or lower. In this case, gap open higher.